Achieving financial stability is something most of us strive for, but many find it difficult to attain. The truth is, financial stability isn't about making more money. It's about managing the money you already have. The foundation for financial stability is a simple, well-crafted budget. A good budget helps you plan, save, and spend wisely, ensuring that your finances are under control. In this guide, we'll walk you through 10 essential steps to create a simple budget that will help you achieve lasting financial stability. Starting from 10, let's count down to the most important budgeting tip. 10. Set clear financial goals. Before you begin building a budget, it's important to know what you're working toward. What do you want your budget to accomplish? Are you trying to pay off debt, save for a down payment on a home, or build a retirement fund? Setting specific financial goals gives your budget direction and purpose. These goals should be both short-term and long-term. For example, a short-term goal could be saving $1,000 in an emergency fund, while a long-term goal might be saving $50,000 for retirement. By setting goals, you'll be motivated to stick to your budget because it serves as a roadmap to achieving these objectives. Without clear goals, it's easy to lose sight of why you're budgeting in the first place. 9. Understand your monthly income. The next step is knowing how much money you actually have to work with each month. Start by calculating your monthly income, which includes your salary, wages, side hustle income, rental income, or any other consistent sources of money. If your income fluctuates, try to take an average of the past few months to get a clearer picture of what you can expect on a regular basis. Avoid counting irregular windfalls like tax refunds or one-time bonuses as part of your monthly income. By working with a realistic income estimate, you'll be better prepared to allocate your money effectively and prevent overspending. 8. Track your expenses for a month before setting a budget. It's important to understand where your money is going. Spend 1 month tracking all your expenses, from your rent or mortgage payments to your daily coffee runs. You can do this using apps like Mint, YNAB, You Need a Budget, or even a simple spreadsheet. Make sure to account for every dollar spent, including both fixed expenses, such as rent, utilities, and loan payments, and variable expenses, like groceries, dining out, and entertainment. By tracking your expenses, you'll get a clear view of your spending habits and identify areas where you can cut back. This step is crucial for creating a budget that works in the real world. 7. Separate needs from wants. To build a solid budget, it's important to distinguish between your needs and your wants. Needs are the essentials you cannot live without, like housing, utilities, groceries, healthcare, and transportation. Wants are non-essential items and activities such as dining out, entertainment, vacations, and shopping. When you're budgeting, prioritize your needs. It doesn't mean you can't spend on wants, but it's about striking a balance. For instance, instead of going out for dinner multiple times a week, consider limiting it to once a week or cutting down on other discretionary expenses. By understanding the difference between needs and wants, you can allocate your money more effectively and focus on achieving financial stability. 6. Create categories and set limits. Now that you've tracked your expenses and separated needs from wants, it's time to set spending limits for each category. These categories typically include housing, utilities, food, transportation, debt repayment, entertainment, and savings. A popular guideline is the 50-30-20 rule. Allocate 50% of your income toward needs, 30% toward wants, and 20% toward savings and debt repayment. However, this rule can be adjusted to fit your specific financial situation. For instance, if you have a lot of debt, you may want to allocate more toward debt repayment and less toward wants. The key is to create a budget that is realistic and flexible. Don't set overly strict limits on areas where you tend to spend more, as this can lead to frustration and overspending. Instead, make small adjustments that are sustainable over time. Build an emergency fund. An emergency fund is a financial safety net that can help you handle unexpected expenses, such as medical bills, car repairs, or job loss, without going into debt. Ideally, you should aim to save 3 to 6 months' worth of living expenses in your emergency fund. Start by setting a smaller, more achievable goal, such as saving $1,000. Once you hit that milestone, continue to build your fund until you've saved enough to cover several months of expenses. Keep this money in a separate, easily accessible savings account. Having an emergency fund can provide peace of mind and help you avoid financial crises when life throws you a curveball. 4. Automate your savings. A great way to ensure you stick to your budget and consistently save money is to automate your savings. Treat savings like a regular bill that must be paid every month. Set up automatic transfers from your checking account to your savings account, so the money is moved without you having to think about it. If you have multiple financial goals, consider opening separate accounts for each and automating transfers into them. For example, you could have one account for your emergency fund, another for retirement, and one for a vacation fund. By automating your savings, you're prioritizing your financial future and making it easier to stay on track. 3. Reduce debt strategically. Debt can be a huge obstacle to financial stability. To regain control, create a plan for paying off your debt efficiently. Start by listing all of your debts, including credit card balances, student loans, car loans, and personal loans. For each debt, write down the total balance, interest rate, and minimum monthly payment. There are two popular strategies for paying off debt: the snowball method and the avalanche method. The snowball method focuses on paying off your smallest debts first, which can give you quick wins and motivation. The avalanche method targets high-interest debts first, which saves you money in the long run by reducing the amount of interest you pay. Whichever method you choose, be consistent in making extra payments whenever possible. This will help you eliminate debt faster and free up more money for savings and other goals. 2. Use cash or debit for discretionary spending. To prevent overspending, consider using cash or a debit card for discretionary spending, such as dining out, entertainment, or shopping. When you physically hand over cash, it's easier to see how much you're spending and stop when your budget for that category runs out. Some people find success with the envelope system, where they allocate cash into envelopes for specific spending categories. Once the envelope is empty, you stop spending in that category for the rest of the month. This method can help you stick to your budget and avoid accumulating credit card debt from unnecessary purchases. 1. Review and adjust your budget regularly. The number one tip for achieving financial stability with a simple budget is to review and adjust your budget regularly. A budget isn't a one-time thing. It's a living document that needs to change as your financial situation evolves. At the end of each month, sit down and compare your actual spending to the limits you set in your budget. Are you consistently overspending in certain categories? Are there areas where you can cut back or reallocate funds? Maybe you got a raise or an unexpected expense came up. Whatever the case, your budget should reflect these changes. Reviewing your budget regularly helps you stay on top of your finances and ensures that your budget remains realistic and aligned with your goals. Don't be afraid to make adjustments as needed. Your budget should work for you, not the other way around. Achieving financial stability doesn't have to be complicated. By following these 10 simple steps, setting goals, tracking income and expenses, creating spending limits, building an emergency fund, automating savings, and reviewing your budget regularly, you can take control of your finances and work toward a more secure and stress-free financial future. A budget is not about restricting yourself. It's about making your money work for you. Stick to these principles, and over time, you'll see how powerful a simple budget can be in helping you achieve financial stability. If you found these tips helpful, don't forget to like and subscribe for more financial advice and tips on how to manage your money effectively. Your future self will thank you.